Welcome back, traders. Going to watch our ICT lecture today titled NQ Review and Extraordinary Volatility. Lately, we've had extreme volatility in the markets, getting hundreds of points of movement on a single 1-minute candle. What used to be trade setups risking only 20 to 25 points, now for the same setups, I would have to risk 60 to 70 points, 3 times the amount. Of course, this also means I can have more profit if I'm able to hold through the volatility. But let's see what ICT has in store for us today. Please give this video a like and subscribe. The original video is linked in the description.
All right, so you can see we've had a monstrous rally this afternoon. I'll get into that in a moment. But this is the continuous contract for NQ, NASDAQ futures. And I want to remind you that we traded down to the depths of discount I was outlining last week. And then came all the way back up, traded up into these two consecutive up close candles, which is a bearish order block. Now, it doesn't mean that I'm saying it's going to go there and then go lower. In fact, it's probably different, probably the opposite.
Probably the opposite. Does he think the market is now working its way back up to all-time highs? If you look at ES, its highs are very, very flat, and we do have relative equal highs as well on NASDAQ, meaning a lot of buy-side liquidity up here. So is he thinking the bear market is over and we will return to a bull market?
All right, so here we're looking at the hourly chart here, and you can see there's an inefficiency. And now we're looking at the June delivery contract for NASDAQ futures for 2025. We have an inefficiency here with a gap and a short-term high, buy-side liquidity. It took that, traded the consequent encouragement of this inefficiency here. Now I'm noticing that we've had several buy-side taken here, here, and smaller short-term intraday in here, which you'll see on the trade that I took. But we went to consequent encouragement of this inefficiency. Watch this candlestick's low to this candlestick's body. So I'm encompassing all of that price action to define that inefficiency. Relative equal highs, they smashed through that today. And this liquidity void, which is no price being offered at all, no buying or selling in between these two specific times, that's a real liquidity void. Okay, so because it got lower, we traded up through it and then back down through it, and then we're back moving to the upside. So consequent encouragement of that inefficiency is going to be influential today. And you'll see that in a moment. All right, 15-minute time frame. You can see the relative equal highs here, the buy side, that inefficiency on the hourly chart. And just back and forth in here, working inside that range, respecting all the quadrant levels. And here you can see that rather handsomely. And ultimately, we get this crazy town rally to the upside. Again, buy side here sits around 20,000. We're dropped down into a 2-minute chart. I want you to take a look at this little area in here. This buy side about sell side inefficiency. So that buy side about sell side inefficiency, it trades back down into it and leaves a small little portion of it open. See that? Between the candles high and where these candles lows form. And then price sends a rally up, retraces back down into this inefficiency, the high of it, the buy side about sell side inefficiency. Then it rallies one more time just to bump the high. And we're dropping down into a 1-minute chart, keeping that 2-minute buy side and balance sell side efficiency in view. And then we have the first presented fair value gap. So we have this candlestick I did today. And we're dropping down into a 1-minute chart, keeping that 2-minute buy side and balance sell side efficiency in view. And then we have the first presented fair value gap. So we have this candlestick's high. This candlestick is the gap. And then the low of this candle here is the high of the first presented fair value gap of April 9th, 2025 for NASDAQ as it relates to the 1-minute chart. So the market trades down inside this little area in here, right on this candlestick. You'll see my entry in a moment. And then it rallies up. And then we have this inefficiency. This candlestick's high to this candlestick's low. No, the volume imbalance. So that's what's annotated there. But it drops down into the bodies respecting the midpoint, consequent encouragement, and then the wicks go down and do the damage testing, that 2-minute buy side and bounce sell side efficiency, but not getting back down into first presented fair value gap. Then it rallies higher, takes the high out here, and then retraces and goes all the way back down into, you can see it just a peak below that first presented fair value gap, again, going into the 1050, 1110 macro. So let's put some lipstick on this and show you where the entries were. Here's the candlestick I entered on, and that little tiny little sideways caret symbol, that is where I entered. So you can see it as the candle opened, as it was a bold-faced bearish candle. You can't go any more extreme than that in terms of buying. Right there, buying on the low, and it comes back off. Next candle trades back down, trades below a little bit. My stop, you saw where my stop was. It was initially right below this low here. The market rallies up, takes out the short-term buy side, and I had a limit order for 3 of the 4 contracts that I bought. Again, look down here. It's 4 contracts entry there. Had a little bit of heat here, drawdown in other words, and then this arrow here on the next slide, which I'll show you now. You can see that that is the sideways little caret symbol that shows you I was getting out at that price right at the high. And then it gave multiple attempts to try to go higher, but then gave up the ghost and finally got stopped out on the last one that was trailed right below here. I had annotated during the recording on my phone that this was a mohawk, which is a little outside the range coloring, which is permissible before it gets to the target. And that's just a brilliant little example of sticking to the rules. And then the market came back down again, working lower over here.
So far, he's just going over the price action for the day. I'm more interested in what he thinks on the higher time frame, if I'm being honest. But you can see the volatility here. This retracement from the 500s to the 300s is just way too much for me to hold through personally. I would be happy just to get out somewhere around here and not have to hold through all of this. But I guess he was looking for the higher targets, those relative equal highs on the previous chart. But I guess since this retracement down here, when it got back up above the minor buy side, he exited most of his position. Now, I traded on this day as well, looking for shorts after seeing this drop. Took a couple losses within this consolidation, but recovered everything and more on this last move down to the first presented fair value gap. Because price wasn't all that great, and since I was able to recover from my losses, I thought it was enough and just went ahead and closed the chart for the rest of the day. Now I'm getting a little sidetracked, so let's go ahead and continue with the lecture.
Which brings us to the afternoon. Okay, so you can see the business over here where the trades were entered in, where it was finally stopped out in profit on the last single contract. Then as we went through the lunch hour, we had the first percent of fair value gap again used here, then here, and they worked inside that new week opening gap around the high, came back above it, worked an old new day opening gap on the 8th of April, traded lower, and this is the spike down in, and Trump halts the tariffs for 90 days. And then the market goes ballistic, literally tears the face off anyone that's short, and just completely runs amok. This goes like a bat out of hell straight into the inefficiency on the hourly chart here and traded right into the consequent encroachment of that inefficiency. We have a small little new day opening gap here. Make sure you annotate on your chart. Folks, these are 1 minute candles. 1 minute. Look at the the velocity of how fast this thing was moving. It was moving hundreds of handles inside of the time duration of 60 seconds. You can't protect yourself from that, folks. Your stop loss isn't going to work. It's not going to work. You're going to get out at a very, very grossly unexpected exit price. And it might do greater harm than you're willing or able to weather. But you have to be very, very careful. And if you're leveraging in these current climate, in this condition, if you will, in the marketplace, you're gambling and you're playing Russian roulette with not only your finances, but your peace of mind and your health. Because if you get caught offside on something like this and you're a fool and you're not using a stop loss, not that it would do very much protection in this regard here, but let's say you weren't using a stop loss and you were shorting. You had your hinder parts handed to you today. And that type of pain is what I'm trying to spare you from. Trading is not always getting in and riding moves from one point to another. A lot of it's waiting for sound setups, low risk, high probability conditions. And folks, you can call whatever you want to call right now. And if you happen to be part of something like that rallied today, that's you just being on the right side of a happenstance. I'm not going to call it luck because there's no such thing as luck. But you just found yourself coincidentally on the side that just happened to not tear your face off. And I'm certain there's people out there that were not so fortunate today.
Okay, so that's pretty much it for this lecture. This video was basically a service announcement warning us of the risks involved during times of extreme volatility. When I got into trading for the first couple of years, I would look at big moves like this and feel FOMO that I missed out on a good opportunity. Yeah, if I was on the right side. But if I was on the wrong side, I would feel like I was in hell. Moves like this may look good, but remember, in trading, price action is always a double-edged sword. Every move, you can either cut a piece out of the market or you can cut yourself. So hopefully you found this insightful. I hope we get some higher time frame market analysis from ICT maybe this weekend. For sure, I'll put out my market outlook, so make sure you're subscribed so you don't miss out on that. And give this video a like, and until I see you next time, safe trading.